Well, finally, good evening, everyone. Welcome to the delayed version of Tuesday Night Q&E. I'm Clay, joined by the somewhat frustrated E-Train, having some internet connection problems.
Major.
So she still
It
is kind of a little achy breaky there, but I think it'll work and suffice. Appreciate y'all being with us, joining us. Uh, sorry to sorry to be late. Um, Been an interesting weekend. As you can tell, E-Train has been redecorating a little bit. She decided the cow wasn't big enough, so she went with a pallet and trying to add appropriate accents to it. Hello, Melissa. How are you doing? It's good to see you.
Can you hear me okay, or is it just like broken up?
No, you sound like Alvin, but I can hear you.
I hate you. No, I have Melissa. This is your shelf right here. All the things. We have got
Actually,
dinosaurs.
some of the little trinkets, and that the dinosaur cup is a major feature.
Mm-hmm. I think so.
Hello, Jane. How are you doing?
And I do
Hey,
apologize if my camera, Lord, is weird and all the things. This is not like how we normally do things, and I don't know what's going on. But
She
anywho,
was telling me earlier that they're working on the internet out there, so there's could be some slowdown there, and hopefully they will get it fixed soon.
hmm
Soon and very soon.
that helps.
Uh, it's been a guess it's been a week since we've seen you. I was out Saturday at a student competition, CFA Society here for the state.
And how did that go?
Well, I am rarely happy with the judge's decision, but we came in second.
You
So,
always come in second.
well, not always, but um, we have the past few years, and we happen to have another team in the state who has gone to the global finals. So they are extremely well run program and have been for a decade. So we're playing a little catch up to them in that regard, but we'll catch up to them. We have, we've come along leaps and bounds the past couple of years. So was real proud of our guys. They did a really good job. In fact, if they gave this presentation last year, they would have won. But welcome to rural America. Yeah, she's living the life. And second is better than last place. I was telling my kids if they'd given this presentation last year, they would have won the state. And we have some very good schools in this state. Uh, so that is, that's no small accomplishment in and of itself. They represented the school, well, and put a lot of work into it. But, we've obviously still got some room for improvement. So we're going to work on that over this next year, try to figure out how to do things a little bit better. Um, I am modestly competitive in nature. And, I, I just want to win. I want to win. So we'll see what we can do. E-Train is resetting her modem, trying to get that lined up. So we will wish her luck on that. Meanwhile, this is Tuesday night Q&A. This is really y'all's night to throw out questions, comments, ideas, whatever. We've actually, received a couple little things from some people. So we'll talk about some of those tonight. And if you've got something on your mind, then throw it out. Now, for those on Rumble and X who are watching us live, feel free to ask your questions. They don't show up on my StreamYard feed. StreamYard is the hosting service that then broadcasts out to YouTube, X, and Rumble. Questions from YouTube, for those viewers on YouTube, show up, but the questions from X and Rumble do not. Ellen or E-Train will monitor them and relay them. So once she gets logged back in, hopefully her system is a little bit smoother operating. And if you've got some questions or comments, go ahead and throw them up and she'll relay them when she gets back on. Now, a lot of things going on this week. Oh, one other thing I want to add. Talking about, I was out Saturday. Also, normally we broadcast Tuesday and Saturday nights. This coming Saturday and the following Tuesday, we will both be out of town on the road. I'll be in Prague, 6 hours ahead. So that'll be 2, 3 a.m. in the morning. May not make that broadcast. E-Train will be at a business meeting, so she won't be available. Same thing Tuesday. But the following Saturday, I'll be flying back in, but E-Train and Jane Post are going to host kind of a homesteading show, a night, kind of a girls' night. So look forward to watching some of that when I get back in town. But then after that, we'll be back fully on the regular schedule. So no show this coming Saturday or the following Tuesday. And then we'll be pretty much back to a regular schedule. So we appreciate y'all's patience and your continued support. Now, a couple things wanted to go ahead and talk about tonight. The first one is gold. Gold has been a hot topic of conversation over the past, few weeks. And, gotten some questions like, is gold money? And it really depends. Some people say yes, some people say no. Depends on your definition. The definition I use is Manager's salability standard. Is it saleable according to scale? Saleable according to space? Saleable according to time? Scale simply means, can the main unit, be divisible and still retain its value? Like, you can buy the same with 100 pennies as you can $1. So it's saleable according to scale. Gold, a portion of an ounce has the same value on a pro rata basis as, a bar or an ounce or whatever. So it is saleable according to scale. Saleable according to space. This is kind of one problem with gold because it's not very portable, particularly to carry in any volume. It also, there are imitators, fool's gold, and some other combinations. So you have to assay it. You have to test it to see if it's real gold. Now, the process of assaying actually destroys a part of it, a little bit of it. So that's not an easy, quick, or convenient process. So gold kind of fails a little bit on the space, on the portability of it. Now, store of value, what some people call store of value, salability across time. This little graph that I popped up here is the inflation adjusted price for gold. And as you can tell, there are some times when it lost value and it remained deeply in a negative position for an extended period of time. There are other times when it has just done exceedingly well. So, some people say that the store of value, like Bitcoin, we've talked about Bitcoin is Bitcoin money. And people knock it because it is so volatile that you may not be able to purchase as much with it tomorrow as you can today. Price might drop. Gold has that same risk. There are many, many times where that price has dropped and dropped severely. So that applies to gold as well as it does to Bitcoin. Now, gold has been on a run, has done fairly well since the subprime crisis. There was a time in the middle teens, 2013, 14, 15, 16, where it depreciated, devalued some, but it's come back, and the past 3 or 4 months, it's been on a tear. So I really don't per se consider gold money in that regard. It kind of fails those tests. Now, in terms of the store of value, if you look at it over time, now this graph goes back to 1915, I believe. And over a longer period of time, depending on where you start, if you start in 1915, then it took it roughly to the 1930s for it to regain its value. And then from there, it dropped and stayed low until the 70s, early 70s, when Nixon did his little thing with gold. We'll talk about that more in a minute. But some people consider gold the only true money. To me, like I say, it kind of fails Menger's test, 3 test. Now, if you look at it over a longer period of time, 20, 30, 40 years, most times it holds its value. Most times. Bitcoin is actually better at that than gold since it was invented in 2010. So there you go. A lot of the talk about gold has been over not only the rise in price, but a lot of it is being moved to the US. It's being moved from places like London, Stockholm, countries in Asia, etc. And the reason is largely it's tied to economic and geopolitical factors, some of them based on recent U.S. policy shifts. One thing driving the increase in the price of gold is the increasing concern that a recession is underway. Now, I have stated for a while that I think we've been in a stagnant or even a recessionary economy for a year and a half. I mean, 2 million jobs have been lost in the private sector, and that's probably an undercount. The only jobs added have been in government and healthcare, which is paid for by government, so government jobs. And in the private sector, the only jobs added have really been in part-time. So that's kind of an issue. Jane, gold is only as valuable as the value society places on it. It is perception, and that perception waxes and wanes. And that is true for most assets, honestly. You mean to restock Fort Knox? Some people think the gold isn't there, and that's why they want it audited so bad and they want it audited relatively quickly before there's a chance to paint some lead, put it up on shelves or whatever. I kind of wonder in my own mind if there's more gold at Fort Knox than there's supposed to be. A lot of the gold from Iraq, not Iran, Iraq. There was some gold found in Afghanistan, different places. So what happened to that? Don't think the soldiers made off with it. And I have not seen a good accounting of that. So if there's more gold in Fort Knox than what's supposed to be, if there's less gold in Fort Knox than what's supposed to be, the government's got a lot of splaining to do. If there is the correct amount of gold in Fort Knox, then the government doesn't get any kudos or thank you or congrats, you did well. Just, everybody just switches gears and goes to something else. So it's kind of a no-win situation for the government in terms of having the gold audited. But, I am curious. I want it audited. I want to see what's there. I remember a year or two ago, was it Massey or Rand Paul? I forget who, maybe some other one. But a senator requested to go and view the gold at Fort Knox, and the Army told him no, which is highly unusual. I mean, senators, control the purse strings, supposed to review and audit, the budget of the Army, of the military, the Defense Department. And for them to tell him no, that was kind of odd. So, Jane, I agree there's extra stuff in there. Yeah, I am curious as to what all's in there. And so I would like to see him down there sooner than later. No audit. I think they're going to do an audit. How soon? I don't know. But Trump was talking about it on Air Force One the other day, saying, we're going down there. So it sounded like sometime soon. The problem is there is so much going on in DC with the new administration. I mean, there's, always kind of new stuff with the new administration, new personnel and changes, staff changes, all that kind of thing. But I have never seen an administration so relentless at pushing immediate change. Some of the changes they're implementing just have the opposition party on their heels. They can't respond fast enough. So it's a little bit chaotic. And, some people are disappointed because, like, the Epstein names haven't been released yet. I think they're going to be soon. Don't know when, but soon. And some people are upset that it hasn't been done yet. I'm not sure what the delay is. Pam Bondi, the AG, said she had the list on her desk. I'm sure she would want to go through it, make sure there wasn't any national security issues there. I don't know. But for example, say Prince Andrew's name is on there, the royal family of Great Britain. I'm just throwing out a hypothetical. I'm not saying it is, but it's been alleged that he visited the island a number of times. If his name is on there, then that's kind of a foreign relations issue. And you would normally seek the foreign government's permission to dox their ruling class. I'm trying to handle this delicately or just throw out an example. So I suspect that's part of the holdup because the previous administration had no interest in releasing the list. This administration has stated repeatedly it wants to release the list. So there she is. E-Train, are you working?
I'm trying. I mean, it's
Sounds better.
okay. It's still a little bit slow, but it was reset and it takes about 10 minutes to do so. So,
Yeah. Well, you're a little jumpy, but your voice sounds good. So
fair enough.
you sound good as Alvin.
Really? Are you just fucking with me?
I might be kidding you a little bit.
Okay.
I wonder about King Charles being on the list. I wasn't going to, necessarily say that, but that very well may be a possibility.
Okay,
so I would be a whole different issue.
Yeah. I sent you the question about gold. Okay, so what is petrodollars?
Petrodollars is generally oil money, Middle East money.
But they say it's petro US dollar. I was just listening to this thing and I was like, okay, so now it's more like petroleum, not backing, but was holding the value of US dollars until OPEC and Saudi decided that they were going to make as much as they wanted to.
Okay, you're going back to the 70s?
80s, 90s.
Okay. Um,
No, that was more recent. Saudi was like in the aughts.
well, a brief history. After World War II, Great Britain
Mm-hmm.
and the U.S. obviously the U.S. was dominant military, and so U.S. oil companies, British oil companies, discovered oil around the Middle East, Saudi Arabia, etc., and started drilling. And so they controlled the supply and the price. Well,
Okay.
as some of the money started flowing to the um, Arab nations, they, became a little bit better educated, understood more what was going on, understood the nature of the business, and so they decided to form OPEC,
Mm-hmm.
really an alliance of oil producing economies. And many of them, threw out the U.S. and the British oil companies and started. Whoops! Now I'm cutting out.
We're all screwed tonight. I don't know why. It's just like a mess. My video is screwed.
Um,
I might cut my
my
video and just do audio.
Yeah, my connection shows, good. So I don't know what the problem is. I wonder if it's StreamYard. I don't know.
We both have mesh networks, right?
Yes.
Hmm.
So I should
I don't
have
know what's
ample
going on.
bandwidth to cover the
Plus, the one here is mesh too.
the broadcast. Melissa, let me know if the problem continues. Maybe I just need to switch providers if this is going to be a reoccurring issue on occasion. I can't imagine King Charles would be on that list.
Which list are we
His
talking about?
Epstein list
Oh.
and why it hadn't been released yet.
Well, you heard Oprah is like getting the hell out.
A lot of people are getting the hell out. So people are wondering why it hadn't been released yet, and I've been saying that it may be because there's some foreign dignitaries on there, like Prince Andrew has been rumored to be a frequent visitor, close associate of Epstein. I don't know that for certain, but that's the rumor. And if his name was on there, normally before you dox or implicate a foreign dignitary in a crime, you normally have to receive permission of the country
Hmm.
first. And so they may be trying to secure permission from some of the countries whose have preeminent families involved in the or on the list. That's the only thing.
Even if it's truth.
Yes, that's kind of a courtesy. Um, and if foreign countries had dirt on an American senator or congressman or president or cabinet member, there rumors have it there was a lot of dirt out on the Biden family, but you never
No,
saw any foreign nation saying anything.
they should have.
Um, yeah, there's a lot of rumors about various American politicians, senators, congressmen, some of their proclivities, activities, some of their incentives for voting the way they do. Again, no outside of the U.S. criticism, release, whatever. So these things can be somewhat delicate, and strongly suspect there's something like that, some sort of national security issue where, a country may not want its particular citizen doxxed, and they have a very important military base that the U.S. needs to keep open. What do you do? So even if we couldn't detail all the international royalty on the list, I would still release it redacted and just release the Americans. That's really what's primarily most of interest to me, and I think most Americans. And thanks for the update, Melissa. But I hope it's released soon. I'd also like to see, some of the other lists and videos and information. They're supposed to release all the files on JFK and RFK.
That'll be awesome.
As well as the 9/11 files. There's apparently 9 or 11 pages of disclosures that have never been released or mentioned. Yes, ma'am.
Do you see what just happened on StreamYard?
No.
I made a comment on X and it showed up. It's amazing how they fixed that.
Interesting.
Mm-hmm.
Well, that'll work. So you made that post on X and it, okay.
Yes.
Can you try it on Rumble for the fun of it?
Sure.
And see if that works. StreamYard has apparently been listening to our pleas and concerns. Anyway, Epstein list should be out sometime soon. Back to gold. We were talking about, is gold money or not? But primarily started to talk about why is it moving to the U.S.? There have been a lot of reports about tons of gold being moved to U.S. There's been a lot of trading in gold, particularly gold futures, and we'll get to that in a second. But, I was talking about, I'm trying to remember where I was talking about how, one incentive for people buying gold is economic or geopolitical concerns. And we kind of have both of those going on right now. Economic, like I said, there's increased talk of us being in a recession or having a stagnant economy with inflation increasing. We've talked over the past several months about how inflation's been trending upward again. In terms of geopolitical, the new administration has brought a whole new series of issues. The fear of tariffs being proposed by the Trump administration. What I have seen so far is a proposed. Now, I break tariffs into two different groups. The first group, the ones that we're seeing now, are retaliatory, like Canada and Mexico and China. They will put. Canada has a 300% tariff on U.S. beef. They just will not import U.S. beef. Won't allow it. So a lot of these tariffs are retaliatory until Canada lowers its tariffs on U.S. imports. To me, that's a whole different set. The second set, and the one that I think has more concern for or uncertainty surrounding it, is the tariffs on all imports proposed by Trump to replace the income tax. Now, we've talked about before how I think net that would be better for the American. You would have a little bit higher inflation, a bump in inflation, but you would have 3 times the increase in your disposable income for the average family. So net net, that would be a winning proposition for individuals, for families, the poor and middle class, working class families. But its impact on the economy, there's uncertainty, and uncertainty always is risk. And so when there's increased concern about risk, gold becomes a little bit more attractive. So this has led bankers, investors, traders, really, to relocate gold to New York, where prices have spiked. Um, Prices in New York are sometimes $20 more an ounce than London, which kind of creates an opportunity to arbitrage that, to exploit that price difference. Exploit that price difference. Now, London traditionally has been the world's physical gold trading hub. And I mean, it's been that way ever since the East India Company. London's been an international hub, the hub for international trade, because they got a head start on everybody else with the East India Company back in when did that start? 1600s?
Hang on,
I'm
hang
not
on. I
exactly
have so
sure.
many questions.
Okay.
I'm sending you a graph that I want, and it lines up with your graph, but it's different.
Via
Okay.
email?
Yes, sir. To
Okay.
work.
Okay.
And this is what I have a major question on. The petrodollar versus um, China emerging markets buying U.S. treasuries as the EU stops, and how the global FX reserves peak after the Chinese yen is used to buy oil, and how weird and funky that gets.
Oh, geez.
I know.
When you see this graph that Ellen sent, you'll understand my OGs.
It's
I have to
1954 to
first
2016.
save it.
Okay, sorry.
It's all right.
I want you to explain this to me and us and everyone here, because I'm like, okay, what? So how is that? Okay, go ahead. I'll shut up.
No, you're fine. Um, and I kind of, I was kind of going to explain all this in a little bit more sequence, but I will just go ahead and do it with, kind of do some of it with this graph. Now,
Because 2002 it goes to shit.
yeah, this 19 goes back to 1954.
Mm-hmm.
And Bretton Woods agreement was in. Bretton Woods tied the U.S. currency to gold at $35 an ounce. Okay. So any foreign nation that has US dollars, like when we invest in foreign nations, we invest in dollars, we spend dollars. When American tourists go over and travel, they spend American dollars. They may convert it to the local currency, but the banks over there end up with dollars.
Yeah, the
These are
US
called,
dollar is or was the um, international standard.
yeah, the reserve currency.
Mm-hmm.
Still is, sort of. It's weakened some, but it still is. So all these dollars accumulate in foreign banks. They are generically referred to as euro dollars, even though they may be in Asia or South America, just outside the US, euro
Right?
dollars. Well, you had all these foreign banks start accumulating dollars in the 60s, late 60s. Once their economies, started getting and countries started getting rebuilt, they start producing products, start shipping cars to the US, etc. They started accumulating a lot more dollars. Well, under the Bretton Woods Agreement, which established the dollar as the world's reserve currency, the currency of business, the gold was tied to the dollar at $35 an ounce. So countries could redeem their dollars for gold.
Mhm.
$35 an ounce. That price was fixed.
Okay, real
Well,
quick before we get too far into this, what is let's say the price of gold in Fort Knox? It's still at that rate, is it not?
it's on the books at that rate,
Okay.
but that's just a book number. Nobody's ever bothered to change it.
Okay.
It's like when a company buys a car for
Mhm.
$10,000,
Mhm.
they'll depreciate it every year.
Mhm.
But the purchase price remains on the books, $10,000. It's never adjusted for the market price, and the depreciation is calculated off of the purchase price. So it's kind of the same thing. Assets always stay at their purchase price in most accounting systems. So Bretton Woods, you could exchange dollars for gold at $35 an ounce. Well, other countries, particularly France in the late 60s, early 70s, started using their accumulation of dollars to buy gold from the US. They wanted the gold instead of the dollars. And so the kind of the spot price of gold off books increased. The official value was still $35, but it was kind of hard to find. But you could always exchange it or buy from the US, according to the Bretton Woods Agreement. And the US after World War II had roughly 20,000 tons of gold in its vaults. By 1971, that had dropped to 9,000. We literally, over the last few years prior to that, transferred 11,000 tons of gold to international buyers. And that's when Nixon came in and said, okay, we're ending this. The dollar is no longer redeemable for gold. Now, some people will say that's when we went off the gold standard, but that's not entirely accurate because FDR in, I don't know, 1930, 1932, I forget the exact year, but he signed an executive order that made it illegal for Americans to own gold in bar form.
That seems wrong.
Yeah, and this was in the 30s. So that's probably technically more accurately when we went off the gold standard. Um, so the first section of this that you see is the Bretton Woods period, where
Okay.
the orange line, I'm trying to look for the legend.
What does
This is
FX stand for?
foreign exchange.
Okay.
WTI crude prices versus effective Fed funds rate. This isn't even about gold. This is about oil.
Yep.
So the blue is the oil price. The orange is the Fed funds rate. I was
Mhm.
thinking it was gold. Sorry.
Sorry.
I'm talking about gold. And Ellen's throwing up something about Fed funds.
Well, because this was like because I heard this today about the petrodollar and how when we went off the gold reserves, this is like and Bretton Woods gold standard, you know all about that. And petrodollar era started in 1973.
Probably, I would say a little bit before that because Nixon took us off the gold standard internationally with international transactions in 1971. I forget the
Like I
month.
said, this is like gold to petrodollar to whatever.
This has nothing to do with gold.
The Bretton Woods gold standard was until 1971.
Oh, that just simply tied the dollar to gold at $35 an ounce.
And then it became a petrodollar,
Yes,
which is it
because the
was
U.S. signed agreements with countries like Saudi Arabia
Hmm.
and Iran, um, and a few others, the major oil producers, to trade oil in dollars. So
Right.
oil, the international currency for oil was all in dollars. That's called the petrodollar era.
Hmm.
And so all the Arab nations, all the oil producers bought and sold oil in dollars. So
But
the
then what
dollar was
happened?
kind of, as they refer to it in the chart, pseudo pegged. It wasn't an official international agreement, but the U.S. just had, like the U.S. had a security treatment agreement with Saudi Arabia to provide them security because they had no military, to provide them security from invading uh, other countries in exchange for them selling their oil in dollars.
But if the oil price got above like $9 a barrel, it was bad for the US economy or bad for the Saudi Arabia economy. And if it got under $70 a barrel, it was bad for the US economy for sure, right?
Yes.
And so when I had a point here, it was coming.
It's all right.
Sometimes my ADHD goes haywire. But so when
Good
Saudi
seeing you,
Arabia,
Jane. Thank you. Appreciate you joining us.
yes, thank you. So when Saudi Arabia decided to make as much oil as they wanted to and screw the United States, we don't care, right? Isn't that what happened around 2001?
Do what now?
In 2001, Saudi Arabia said, well, if the US and China and whoever can make as much oil as they want to and buy it in whatever way they want to, then why can't we keep making oil and not have a reserve on it? Like, why can't we just make all we want to?
I mean, that's what OPEC said in the 70s.
But they also
In
said
the
it
early
in the all.
70s, OPEC was formed, and they
Hmm.
started as a cartel controlling the supply of oil. And they started dictating the price, establishing an official price. So
Hmm.
that's when you see, prior to 1972, you see the price of oil changed very little, almost none. It's almost at a fixed price. Then starting in 73, you'll see it jumps up a little bit and then continues scaling upward until 79 when it just, doubles in price. That's when we had the OPEC crisis. And I don't know how many people, remember or have seen pictures, but you'd see cars lined up for blocks at gas stations trying to get gas. Um, so US started producing more oil. There was, the price rose. There was more incentive. So as the US started producing more, the price of oil kind of stabilized around, 20, $25 a barrel there
Hmm.
until the mid late 90s. It jumped a little bit due to a couple of international crises. And then 9/11 hit. And all of a sudden, there was war in the Middle East. So that's when you see the price of oil jumping. Um,
Um, okay, this is I am totally quoting Mr. X or whatever. It's sobering when you think of it that way, isn't it? But you have to remember that these aren't the only reasons the world didn't try to ditch the US dollar for oil trade in the early aughts. When the US started to fail at keeping its end of the bargain to manage the dollar for the good of the world. And so, beginning around 2000 or so, when the American and global banks began offering us these new interest rate derivatives that allowed us to hedge our exposure to rising interest rates that rising oil prices would normally have portended without having to sell our US treasuries, why would we have ever questioned them? They were the smartest guys in the room, the strongest system on the planet.
um, I mean, he's saying, this allowed them to hedge their prices, but that's when oil prices soared. So I really don't understand what point he's really trying to make, whoever he is.
It's Mr. X.
I have no idea who that is. Never heard
I
of
don't
him
either.
before.
No one
So
does.
why are we talking about him?
Because it was the 124 pages I sent you
Oh,
today.
geez. Yeah, no.
You're not doing that right now, huh?
No. This guy's just, no.
Okay.
Um, we're
You
going to talk about gold,
Okay. Sorry.
which is kind of what your original question was.
Well, it was, and it got into all this other stuff, and I was just, like, so confused
It
about the
really
whole thing.
get
It
into
was
that stuff. That's a
No, it was the
whole
same
different topic.
No, it was the exact same podcast. I was just like, "Oh my god, like, what?"
Well, the guy rambles then.
Well, the gold became oil, and the oil became things, and it just things got weird. That's why I sent you so many questions. He's
Yeah,
obviously
it's a
related to
complex
Elon.
world, but the bigger issue in terms of changing gold prices was the Islamization of the leadership in the Middle East. You had the Shah replaced with a very militant extremist group who started
Mhm.
weaponizing oil and spreading terror. You had the Iran-Iraq war over that very issue. You had Saudi Arabia increasingly under threats of invasion. Then you had international terrorism, Islamic terrorism spread. So there's a whole lot more going on than what this guy has a clue of.
Okay.
So that's why we're not going to worry a whole lot whatever this guy thinks. Um, so gold. Was talking about London being the international hub of trade and the physical gold storage hub. The largest vaults are run by the Bank of England, and it's seen significant outflows just in recent months. They've seen over 8,000 tons. I'm sorry, 8,000 bars, or roughly 2% of its stock, move out in recent months. So this flow is so intense that at times they've been unable to handle the request and they've had to issue delays. The delay time to receive the gold has stretched into weeks or almost a month. And sometimes they're using like commercial flights to transfer the gold, which is really kind of interesting because normally it's very high security. I mean, when France was getting its gold from New York, they would send military ships to escort the gold laden vessel. Um, and, some of the banks like Morgan and HSBC are moving billions of dollars worth of gold. And that's really to cover futures contracts. Somebody mentioned derivatives earlier. Future contracts. Gold futures hit 29.35 this year. Some are predicting $3,000 soon. So a futures contract, what's a futures contract? A futures contract is an agreement to do a deal in the future at a price agreed upon today. Melissa, yeah, that's a pretty high baggage fee. And that's, one reason why to me gold doesn't make good money because the storage costs, the transport costs are very high. Um, So futures, it's a contract to buy gold sometime in the future, a month, 3 months, 6 months, at a price agreed upon today. Now, the value of that contract depends on what happens to the market price of gold. So if I enter into a contract to buy gold in 6 months at $5,000 an ounce, and gold is $4,000 an ounce when the contract expires, well, I lose $1,000 because I have to pay $5,000 for it when I can turn around and only sell it for 4,000. On the other hand, if gold is trading at $6,000, I make $1,000. So that's a futures contract, and its value depends on its relationship to the market price, current market price of gold. The price in the futures contract is set. It doesn't fluctuate. So you've had a lot of activity in futures contracts due to this instability in the economy and geopolitical issues. Now, the futures contracts, another aspect to the futures contracts is that they can also require gold to be delivered, physical delivery. So you have a contract, you can either be paid the difference in cash, or you can take physical possession of that gold. And an awful lot of the futures contracts are now settling in physical delivery. That's where all the demand is coming for gold, physical gold in New York, and why gold is being moved from London and Switzerland and Asia to New York. Huge amounts of it. We've never seen this kind of flow in such a short period of time. Now, they're also having I just got a message from E-Train. She's having to restart again. So apparently still having some issues with her internet. So hopefully she'll be back here soon. Well, due to the huge demand for physical delivery, some of the traders are unable to obtain it because the contracts specify a specific size gold bar, specifies the purity of the gold bar, the weight of the gold bar, the whole 9 yards, so that anybody buying that contract knows exactly what they're getting. And there just wasn't enough of those bars in New York to handle the demand. So they're having to import them, transfer them, I probably should say, from London and Switzerland and Asia to New York. So in the meantime, these traders who have these futures contracts and who can't deliver, they will buy back the contract before it matures and roll it into a new one. This effectively lets them delay the delivery because physical delivery is tough when you can't get a hold of the gold. So they're able to, instead of having to deliver the gold at the end of the week, they pay off that contract, roll it into another one. They still owe the gold, but it delays the delivery, gives them time to move it from other sites and bring it to New York and deposit at one of COMEX's, which is the futures exchange, has 3 gold vaults. So this is what continues to drive the price of gold upward lately. If you see this graph, you can tell that it has, gone vertical, spiked very sharply. Well, that's what's driving it upwards. So you've got a combination of factors forcing this demand for gold or encouraging this demand for gold. You've got the potential trade wars from the tariffs. You've got inflation fears increasing in the U.S. You've got economic fears from a slowing or possibly already recessionary economy. And you've got central banks around the world that have been buying gold consistently and trying to stockpile it. China has been heavily into the gold market, trying to buy it for several years. So there's just a lot going on with gold. Some speculate that this reflects even deeper, more systemic worries, such as a move away from fiat currencies or preparation for great economic upheaval. But the most immediate demand is, the economic and geopolitical items that I've mentioned driving the demand for physical delivering gold. Now, looking at gold's kind of historical price around mid 24 August, futures were hovering at around 24.50 an ounce. And that had an upward trend since the beginning of the year, but really starting um, end of January, early February, futures prices climbed to around 2,900, 2,935, 2,950. So you've had an appreciation of about $485 an ounce, roughly 19.8% over 6 months. That's a pretty good move in gold. The spot price or the current market price, remember the futures price is a contract. It is not the market price. The spot price, what we call the spot price, is the market price that changes every minute. Well, the spot price has followed a similar trajectory as the futures price. It's obviously heavily influenced by active futures trading. In August of 24, gold was around 2,400 an ounce. Now it's about 2,900. Spot price is around 2920, somewhere around there. And closely aligning with the futures prices, adjusted for what we call contango. Kind of a fancy word, but that's where the futures price typically is higher than the spot due to what we call carrying cost. For example, gold has high carrying costs. What's the cost to carry gold forward into the future? Well, if you have a chunk of gold, the U.S. has a chunk of gold at Fort Knox, we hope. What's the carrying cost of that? Well, Fort Knox was surrounded by the 10th Armored Division, a division, 10,000 to 12,000 men, an armored division, 6 to 800 tanks. You want to know why nobody ever robbed Fort Knox? That's probably a pretty good disincentive. But how much do 10,000 soldiers and 600 tanks cost you? That's your carrying cost, not to mention the cost of building the Fort Knox, cost of the building the bank vault. So that's the cost of carry, and that cost of carry is included in the futures price, which is normally higher than the current market price. That difference is referred to as the cost of carry. So there's your futures lesson for the night. I hope that makes sense. If you have some questions, let me know. Please feel free to ask. So looking at the performance of the two different assets, the futures are up about 19.8, while the spot price is up a little over 20%. So they're pretty close. The difference is small, but it reflects pretty close correlation between gold and futures, with an allowance of difference for the cost of carry. So I hope that makes sense and kind of helps us explain what's been going on with gold. We got a couple of questions off of that. I know that's maybe a little bit tedious, but that's the simplest explanation I can give you that I hope makes sense. Now, we alluded to the fact earlier that Nixon ended the international transfer of gold. Roosevelt ended the domestic transactions in gold 40 years earlier. Nixon's, ending the Bretton Woods agreement is referred to as the Nixon shock because it came kind of as a surprise to, a lot of people in the world who weren't expecting the U.S. to cut off transfer of gold, something they had agreed to years ago in the Bretton Woods Agreement. Just got another message from E-Train. I can't get back on. Bless her heart. She is having some more kind of issues tonight. She'll keep trying. Hopefully she'll be on shortly. Now, the Bretton Woods Agreement was the post-World War II agreement that pegged all the currencies to the U.S. dollar. It made the U.S. dollar the world's reserve currency, the currency of trade. Set gold at $35 an ounce. Now, remember in the 60s, you had a lot of chaos going on in this country. You had the Vietnam War, you had the Great Society programs, all the welfare and Medicare, Medicaid starting. So you had some huge changes in the economy going on at that time. Dollars were flooding the world because we were buying everything. But the growth in the gold at Fort Knox wasn't keeping pace. We weren't using the growth in the economy to buy gold. It was just kind of sitting there. Well, countries like France under de Gaulle, started cashing in their dollars for gold. France was a big buyer. And that's when the total volume of gold fell. So Nixon really kind of faced a dilemma. He could continue to uphold the Bretton Woods Agreement and empty the U.S. of all the gold reserves in short order. He could keep shipping gold out. Or he could cut off the supply of gold. And you had economists, most economists at the time, like even Milton Friedman, warned that the gold window couldn't hold. Foreign dollar holdings of the dollar, the amount of dollars held overseas, exceeded the U.S. Gold holdings. So they could literally drain the U.S. of all the gold it owned. So Nixon pulled the plug. He stopped convertibility to stop the hemorrhage. Some people are mad because he, quote unquote, took the U.S. off the gold standard. He really didn't. We were already off of it. But the only other alternative would have been to deplete all of the gold in the U.S. reserves and send it overseas. So this basically set the dollar free. The dollar started floating. Currency exchange started. Everybody was pretty much on a fiat currency anyway. This just made it official. Also, gold prices were freed, and gold soared, hitting nearly $200 an ounce by 1974. $200 an ounce. That doesn't sound like much now, but remember, a year and a half earlier, it was 35. So the move ultimately was about keeping control of the gold that the U.S. held at the time and dodging a balance of payments crisis. So now some critics say it unleashed inflation, but we had inflation before. We've had inflation on a gold standard. We've had depressions on the gold standard. Gold does not per se protect against inflation. But either way, it shifted gold's role from kind of it's important because it did shift gold's role from a currency backstop or anchor to a market economy. And that really ultimately reshaped international finance. So hope that gives you a little bit better background. Couple of things going on in the stock market. We have talked for months about my views on the market and how I think, it has been getting a relatively expensive market. Saw a survey by BOA, Bank of America, who surveyed fund managers, portfolio managers, asset managers about the U.S. stock market, and an astounding 89% of them said that U.S. stocks are overvalued. It's the highest ever since the BOA has been conducting the survey going back to 2001, April of 2001, I believe. And anytime you get 90% of all the fund managers in agreement, that's impressive. Trust me. As a group, particularly some of the more preeminent ones just, refuse to see anything but blue sky. We've also seen where the Mag 7, we talked about the Mag 7 all last year, how all the movement in the S&P 500 was due to 7 stocks named the Mag 7. Well, the Mag 7 is no longer Mag. And looking at the performance of each one since the beginning of this year, well, Meta is up around 19%. So that's pretty good performance. Meta has been the standout, no doubt, maintaining the momentum from 2024. Well, then you've got the rest. Amazon is up only 1%. They've seen some growth, but it's given back a lot of the 2025 gains. Nvidia has really fallen off. They're up 4% for the year. Remember, the year's 2 months, but at the rate they were going at the end of 2024, people were like, this thing's just literally going to the moon. Their performance has been extremely volatile. Down earlier in the year, it's rebounded slightly with some of the AI demand and increase, but it's still behind its 2024 highs. Alphabet, otherwise known as Google, I still call them Google, probably always will, is down 2.5%. They've been struggling with concerns over ad revenue, competition. A lot of people are increasingly using AI like X's Grok to search, using it instead of Google. It actually seems to give better responses. Google has kind of developed kind of a complex algorithm that favors certain companies, certain responses over others. And from what I've seen, Grok doesn't have that kind of bias in it. It just will generally rate things according to popularity, which is a relatively indifferent measure. So Google has got some issues. Apple is down 1%. I just saw where Buffett dumped more Apple stock this past quarter. So Apple's been flat to negative, facing a lot of headwinds because one, its products, it's not innovating anymore. Its products kind of all look the same, kind of all act the same. They come out with a new iPhone. It's like, here's the new iPhone, same as the old iPhone. There's really no advantage in paying $1,000 for a new iPhone. You'll get practically the same thing. Differences that you won't even notice. Microsoft down around 4%. Microsoft has underperformed. People say underperformed. I think it's, going back to where it ought to have been. It has very muted reaction to its Azure growth and its heavy AI spending. It looks like actually Microsoft is pulling back from some of its AI spending. There's some rumor and talk on the street that some of their capital energy projects have been canceled. They were going to build energy plants for their AI plants so that they would have an energy source for their data centers. Looks like they're starting to back off some of those. Maybe they were too optimistic in their growth or demand estimates. I don't know that for sure, but that's kind of the rumors going around the street. Tesla is down 8%. It's been the weakest link of the Mag 7, no doubt. One, due to softer EV demand. EVs have really fallen off in terms of popularity. And, Tesla has cut the prices on their cars several times. So their margins are really tight. Then there's the political headwinds that Elon Musk is creating. among a segment of the society. People opposed to the administration are getting opposed to Tesla, whereas they used to be Tesla supporters. So this is, actually costing Musk some bucks, some relatively big bucks. Now, don't feel bad for Elon. SpaceX is still doing well. Grok X. I just saw the other day where he's talking with investors about issuing some additional shares in X, and at the price they're talking about, it values X at $44 billion. If you'll remember a year ago, Forbes or Fortune or one of them estimated it at 9 to 12. So it's really made a hell of a rebound over the past year, both in increased users, and all the companies that were boycotting it for advertising revenue have come back. So their advertising revenue has really gotten much stronger. So, you don't have to feel really bad for Musk. He's going to be okay. Collectively, the Mag 7 underperformed the broader market, which a year ago nobody would have imagined. Me saying just a year later, they look like they were going to be the future. As a group, they're down around 1% to 4%. It depends on if you equally weigh them or just average their numbers. The S&P is up about 4 or 5% for the year, so that gives you a comparison. So you've got, and remember, Meta has really outsized gains for the group. You take Meta out, and they're down, 6-7%. Will they come back? I mean, NVIDIA had such a high P, it was like up to 75, that it needed phenomenal growth just to justify that, even if it held at that price for an extended period of time. It was stupid, way too high. Some of the others, Tesla, will EVs come back into vogue? I actually think they will, but they'll need a new battery. A lot of people are concerned about the lithium batteries in California. A lot of the houses now have toxic waste sites because they had an EV in the garage that caught fire. That was part of the problem with putting out the fires, and one reason the houses burned so severely because the heat and the fire from these lithium batteries. So that also kind of adds a damper on the lithium technology. Now there's some new developments. I think there'll be some great improvements in batteries, both in their cost and longevity and their, how do I say this, impact on the environment. Lithium is toxic to mine and is toxic waste when you're done with the batteries, much less if they catch fire. So there's some work with graphene and some other elements that offer improvements in battery life, be much cheaper to obtain, should be cheaper to sell, and don't have the toxic impact that lithium does. So if you improve the batteries, able to cut the price in half, they last longer, they'll go further. I think EVs will, become more attractive again at some point in time, but we're not there yet. Bitcoin, one of our favorite topics. And I thought Carson was going to be here tonight. Figured he would have something to say about Bitcoin. So, Carson, wherever you are, you're missed. Your absence is duly noted as well. Bitcoin has kind of been hammered the past few weeks. And a big key driver in that is the economic uncertainty we've seen in the economy. That weighs on all risk assets. Bitcoin's not alone in that. The market obviously has had some issues as well the past week. And since Friday, particularly, there's been a lot more discussion and commentary on potential U.S. recession or stagflation. Inflation discussions have increased. You've got added to that trade policies now are a big topic of conversation. Remember last Monday, President Trump stated that he was reiterating plans for imposing tariffs on China, Canada, and Mexico. So these tariffs would be 25% on imports from Canada and Mexico, 10% on Chinese goods, additional 10% on Chinese goods. So to some people, these have reignited fears of inflation. So if inflation continues to rise, and we've got a big inflation number coming out Friday, PCE, we'll talk about that more in a minute. But if inflation continues to rise, continues to increase, the Fed, is not only not going to be able to cut, but they're probably not going to be able to maintain. Pressure's going to increase on them to start hiking again, to tighten monetary policy. If you look at M2, it started increasing again. So the Fed has kind of maintained rates, but they have started increasing the supply of money. The reverse repo facility is also nearing zero. So that's going to dry up liquidity a little bit. It's an interesting position the Fed's getting in. They look kind of stupid for cutting rates as quick as they did before taming inflation. And since they have cut, almost every inflation index has started increasing. Not the best move the Fed has ever made. And, I think back in August, I said the same thing. Well, the higher interest rates reduce, or the possibility of higher interest rates historically will reduce the appetite for risk assets, for speculative assets. And Bitcoin still is a risk asset. You'll see investors shift towards safer assets. So, does this mean Bitcoin is done? I don't think so. One, the supply of Bitcoin being produced has dropped significantly. Two, the surge in demand has slowed, but there's still going to be demand once things settle down. Three, if the administration goes through and establishes a crypto reserve, that'll be significant. And the thing is, Bitcoin has done this kind of fluctuation many times before, but generally the reactions have been far more severe. Right now, Bitcoin is at 88.3. It dropped down to 86.5 earlier today. So it's kind of made a little rebound since then. We'll see what happens. Obviously, Bitcoin has been kind of consolidating around 95 to 100 since it hit at the peak of 112. And there have been some significant outflows. ETFs, for example, on Monday, net outflows from Bitcoin ETFs hit a little over $500 million. Keep in mind, $4 billion a week has been flowing into it over the past year. So having a net outflow of 500 million, okay, it's not good, but that's not exactly catastrophic either. So it kind of suggests that institutional investors are taking some profits. They need some additional liquidity to cover some margin calls. They're reducing their exposure, kind of driving the sell off. But maybe, we're somewhere near the bottom of that sell off. Crypto market has also been rocked by a few disclosures. Meme coins, you've seen several meme coins in the press that jumped up and then just utterly collapsed. What was the girl's name? The Hawk Tua coin. There was a Trump coin. There was a Argentinian meme coin. So you've had a number of these meme coins that jumped up in value real quick and then crashed. So that's taken a lot of luster, kind of burned some people in terms of the meme coin, which affects Solana and Ethereum. Solana is a big underlying structure or foundation for the meme coins, their blockchain. So they've lost substantial value over the past couple months. The broader crypto slump may be dragging down Bitcoin a little bit with it. Another factor would just be technical issues, profit taking. Like I mentioned, when it hit the all time high of what was it, 110, 109. Melissa, we still need a pug coin. Melissa, there's your opportunity. You can create a pug meme coin. And if you do, let me know, because I want to be one of the first buyers. That would be epic. So some of it's just, some profit taking. We've seen it, like I say, we've seen Bitcoin consolidating around 95 to 100,000 for the past week or two. It did drop below 87 today, 86.4, I think it was. And that was actually a break below what are called technical support levels, key technical support levels. So if you were a technician, that was a signal to sell. But like I say, since then, Bitcoin is up 2,000. So, maybe the worst is past. We'll see. The one other event that happened in crypto land is, all right, Melissa, good seeing you tonight. Thank you so much, and hope whatever you are getting into, that you have fun. Take care of yourself. We'll see you soon. Oh, Bybit. There was a hack of a exchange called Bybit, security breach. It involved $1.4 billion in Ethereum hacked, stolen. The suspects are North Korea. And that hack probably sparked some initial panic selling. And that happened last Friday. So if you look at the chart, this initial drop was pretty much when the Bybit hack hit. So that sparked some initial panic selling. Now, it doesn't explain the sustained drop. So if you look at that initial drop combined with some of the macroeconomic headwinds that people started talking about, you get kind of a confluence of pressures pushing Bitcoin a little lower. So investors are also likely eyeing with some uncertainty Friday's PCE release, the inflation index that the Fed follows. Fed really doesn't follow CPI as much as it does PCE. They think it's just a better index for their purposes. Now, some other things and going on in the market. We've talked about Warren Buffett a bunch. And Buffett created an index. We've talked about it before called the Buffett indicator. The Buffett indicator is a relative measure of the market value, the total market value. I think it uses the Russell 2000 to total production in the economy, GDP. And once this value hits certain deviations over or under the historical trend line, then Buffett considers that to be a warning or an encouragement. A warning that stock prices are getting too high, an encouragement to buy because they are so cheap. Well, as of the end of last quarter, you can only use the last quarter's GDP. This index hit $211,000, 211%, which is an all-time high above this 2 standard deviation trend line. So this is just kind of a relative measure. As long as it's under 1 standard deviation, that kind of fluctuation is normal. Up to 2 standard deviation, risk is increasing a little bit. But once it gets above that, Buffett's own words, you're playing with fire. So that's one reason why you see Buffett continuing to dump stocks. And he dumped more this past quarter. He dumped a bunch of Apple, for example. And he increased his cash reserves to $325 trillion, $325 billion. His largest allocation of cash in history, both in terms of dollars and as a percentage of his AUM, assets under management. 30% of his total assets is in cash or short-term securities. 320, actually it's 321 billion, but kind of rounded it off to 325. Thank you, CNBC. So you look at Buffett, you look at 90% of the fund managers, there is kind of a weird agreement that the market is getting vastly overpriced. That makes me wonder if it's not a good time to buy, honestly. I'm a little bit of a contrarian. And when I see everybody else coalescing around a certain idea, I always become much more concerned and start looking at the opposite. But, most every historical measure I use, the market's overpriced, has been for an extended period of time. Good old Musk, good old Elon, one of our favorite characters. He's been in the news obviously a lot. The biggest issue this week was he sent out a letter to federal employees asking them to respond with 5 bullet items of what they did this week. And man, they did not like that. They did not like that one bit. The federal workers just utterly choked. They have never been held accountable before. They've never had to give a reason for their existence. So now if you're in the private sector, are you evaluated? I mean, if you're in finance, you're evaluated every day. You're evaluated every week, every month. Your production numbers, your sales numbers, your profit numbers, the management of your prop desk, whatever. All sorts of different metrics. And if you're not performing, they'll come talk to you. So Musk sent this letter out. Federal workers objected. Certain departments and some of the higher up attorneys told workers they don't need to respond. One of them was actually fired by Trump, but a judge issued a stay. So the guy's still in the position. Some cabinet members have told their staff not to ignore it, but to hold off and let them seek clarification on exactly what to do. So there is and Trump, came out and backed Musk. Now, this is the same tactic Musk used at Twitter, and he ended up firing 90% of Twitter's staff. 80% maybe, a bunch. So Musk, came out today and said, okay, we're going to give everybody a second chance to respond. Now, there's a cabinet meeting tomorrow with every, cabinet officer and Musk. Musk will be there. And so I expect the cabinet to come out tomorrow united and clear on the objective and exactly what the process is. It's very possible Musk kind of jumped the gun and that some of the, cabinet secretaries have a plan in place to reduce staff, but they want it, they were planning to follow their plan. I don't know all the details, but I expect, everybody to work out, an agreement or basis tomorrow and for the cabinet to come out relatively clear on the objective. Now, in terms of Doge and, trying to reduce the federal workforce, most people will agree the federal workforce is bloated. There's 2.5 million federal employees. And Biden added a bunch. I mean, he added or was trying to add 80,000 IRS workers. I could go on down the list, but the goal of this administration is to reduce the federal workforce at least by 10%. So how's that going so far? So far, the downsizing has laid off more than 20,000 workers with another 75,000 accepting buyouts. And the effort is only accelerating. IRS has been told to brace for another round of job cuts. Roughly 12,000 employees already slated to be terminated, which includes, rumor has it, includes 7,000 probationary employees and 5,000 taking a buyout. So the cuts amount to more than 10% of the IRS workforce, the current IRS workforce. Obviously, the future hirings are not happening. Now, interestingly, the 25-year-old software engineer assigned by Musk to scrutinize the IRS, Gavin Klinger, has told executives he believes the agency can meet its mission with far fewer employees. Now, like I said, the goal is to cut 10%, 250,000. So they're nearly 40% of the way there in 30 days. Another impact of this is, like I've said over the past number of months, the only hiring has been by government. Government's hiring 80 to 90,000 people a month. Well, that's probably not going to continue to happen. So not only do you have the cuts, but you're going to have a halt in hiring. That's going to be interesting. The key is, and I thought about this, the other day, I saw a little video clip a while back, and you had Secretary of the Treasury Becerra in October of 23 was being interviewed. And he mentioned briefly that AI would start causing labor displacement around 25 to 26. And I thought, well, damn it. It's hitting sooner than that. I mean, early in 25. It's hitting like a sledgehammer. Thinking about this, I think Doge will be able to fire more than 10% because so many of the jobs can be replaced by AI. I mean, you may sometime in the future see government bid to automate most of these departments with AI, since, I don't know, 80 or 90% of government work is evaluating and approving standard paperwork. It's tedious. It's slow work because you have to verify things manually. And it can be done quicker with better detail and ability to audit, track federal spending. It can be kept on a blockchain with every transaction visible and accessible to the public. You can audit it immediately. You know what every department is spending and where the money's going. And think of the plan. I started thinking, that's the plan. You eliminate the IRS. You'll have a small TRS, Tariff Revenue Service, or whatever they're going to call it, to implement the tariffs and handle the collection on imports. And they'll do it with modern inventory tracking system. Every manifest, every ship's manifest, every plane's manifest will be confirmed as the inventory is offloaded, with the proper taxes being added, the revenues being collected and dispersed with a fraction of the staff. The Treasury Department, all of the outflows, all of the inflows can be automatically recorded, verified, and approved automatically. I was thinking, well, think cutting 20 or 30% of civilian jobs. And I thought, no, that's low. Think 60, 70%. The impact on the federal budget and the economy with cutting government down to that size and cutting income taxes would be enormous. Now, there will be some chaos. There'll be some mistakes. But the potential, once they get the bugs worked out, is vast. If you're into government efficiency. So it kind of hit me. That's the plan. And this is just the beginning. We'll see. But I don't normally make prophecy, but I'm kind of coming close here. I think that's the plan. Anybody have any questions, comments so far? If you do, again, please throw them up. Real quick, I want to go ahead and throw out, this week's big issue, and that would be inflation. BOA is, I guess, my favorite topic of the night. They've been generous supplying us with a couple of charts, some information. Well, they came out with CPI projections. And they basically are predicting CPI, or saying that CPI is on track to hit 4.6% over the next 6 months. Now, CPI inflation has averaged 0.4% on a month-over-month basis over the last 3 months. And if this trend continues, it puts year-over-year inflation for the past year on pace to hit 4.6% by July. This would be the highest rate since April of 23. So that's more than doubled the Fed's target of 2%. So even if inflation, CPI eases to 0.3%, the year over year is still rising to 3.8%. So yes, inflation is accelerating. And Friday, we get a big number, PCE, the Fed's favorite inflation index. So the month-over-month consensus, the opinion of most of the economists who track this and give a prediction, the consensus is 0.3% for headline and for core. One of the Fed bureaus, Atlanta, runs a nowcast prediction of 0.4%. December was 0.3, November 0.2, October 0.2. So the trend is fairly clear. Inflation has been increasing and doesn't necessarily show any signs of stopping immediately. Now, once we have a bunch of layoffs, some of these falling housing prices in the major markets, Florida, DC, New York, Austin, California, you may start to see inflation slow. So I'm not necessarily of the opinion right now that inflation is going to hit 8 or 9% again. particularly if the economy hits a hard recession. There's going to be some chaos over the next 6 months or year. So, particularly if the stock market starts coming to its senses. So, just a word to the wise. That's what I see. That's kind of what I think. Anybody have any questions or comments? I know I've been doing most of the talking. This is a night normally that we want to try to encourage y'all to have questions. We did get some topics for you to discuss, some items of interest. And we appreciate those. If there's something further you want to ask or see us discuss, then email me, moffatonmoney@gmail.com, or DM me on Twitter, moffatonmoney. Please do the internety things. Hit the like, subscribe, whether you're on X or Rumble or YouTube. That helps us out a lot. We would be most grateful. So, hope tonight helped. Sorry for the technical difficulties with E-Train. Miss her when she's not here. And thank you, Jeffrey. Do appreciate you being with us. And trying to think if there's anything else. I think that's really about all I had for the night. So we're going to break it here. Appreciate you guys. Love you guys. Appreciate y'all being a part of the family. And we'll look forward to seeing you 11 days from now. There's no show Saturday and no show Tuesday. Both E-Train and I will be on the road. I'll literally be in a plane coming back from Prague. I've got a consulting project over there. So I'll be out for a week, and E-Train is going on a business meeting over the weekend, coming back Wednesday. So Saturday and Tuesday are off. Next Saturday week, E-Train and Jane Post will be hosting a homesteading show. I'm sure that will be entertaining and highly informative. So I encourage you to watch it. And I look forward to seeing you guys, soon, in a week or two. So blessings to you. Hope y'all have a great week ahead, and blessings to you all. Our time is up. We thank you for yours. Good night, everybody.